So hi everybody, this is Hub and Giacomo. Today we're covering Bed Bath & Beyond. This is one of the stocks that you asked me. Before we get into it, make sure to like, subscribe, and comment for the next stocks you want me to analyze. And if you're interested, the databases that I use for this analysis will be in the description. Without further ado, let's get into the analysis. So Bed Bath & Beyond had a pretty tough time earlier this year and for the last few years, and we have to see whether it will be able to come back. Right now, tough time because first of all, the business where Bed Bath & Beyond operates, because of course, when the economy slows down and there's a possibility of a recession, people tend to postpone the kind of expenses that you would make in a store like Bed Bath & Beyond, like furniture and so on. Second, Bed Bath & Beyond had a tough time even before the current slowdown, so we'll see if it is able to come back. So right now, Wall Street analysts have a pretty negative feeling towards Bed Bath & Beyond. We can see that just 13% still hold a buy recommendation, 48% a sell, which is pretty bad, and 38% a hold. So let's take a look at the latest recommendations they have put out. So Odeon 7.5 still holds a sell. KeyBank target price $2, sell. Baird, Tesla, Morgan Stanley $2. Everybody's on $2 right now. So let's take a look at the last few years with Bed Bath & Beyond. So we can see the trend of the price targets going downwards. Let's see who had the best performance thus far. So let's take a look at the performance score. So let's take the latest ones. So right now, one of the guys that had the best performance out of the latest reports that came out is Bradley Thomas from KeyBank. He holds a sell at $2. So let's take a look. Okay, we can see the trend going downwards. We can see the report that he put out when he gave the target price. So we can see on Wednesday, Bed Bath & Beyond announced a strategic change to drive growth and profitability and improve its balance sheet and cash flows. Struggling company and so on. It announced measures including job cuts, store closures, and stock offering in an attempt to turn its fortune. So probably stock offerings will cause a dilution in the shares or reduce the workforce. Okay. Following the news, KeyBank released a note arguing that there are no server. Following the news, KeyBank Capital Markets analyst Bradley Thomas released a note arguing that there are no silver bullets and the fundamentals are challenged. Fundamentals will be challenged, wrote Thomas. Bed Bath & Beyond is working to enhance liquidity and reduce costs through a new ABL facility, a shelf filling, and headcount and store reductions. While management is working diligently to improve business, we remain underweight and reiterate our $2 price target given the challenges ahead and competitive industry backdrop. So this is one of the reports that came out of some of the best analysts that had the best performance thus far with Bed Bath & Beyond. So let's take a few others. Let's take a look at Morgan Stanley. So we can see they're underweight as well, $2. We can see the trend going downwards from 12 to 8 to 2. So that's pretty negative, let's say. Okay. Next, let's head here and see some of the fundamentals. So we can see market cap pretty low, $384 million, income negative, sales and so on. Employees, we'll see probably a cut from there, very likely to happen, and earnings per share are down, so on. You can see the insider transactions. A lot of insiders sold, so that's not a good thing. So we can see a company really struggling right now. We can see some of the news. Bed Bath & Beyond technology chief resigns after possible data breach. Other bad news coming. And so on. So we can see that Bed Bath & Beyond is facing a very hard time. Next, let's head to my spreadsheet. Let's take a look at the trend that Bed Bath & Beyond had in the last 10 years. So 2012, we can see the revenue going up, and then the last few years it went down quite significantly. The EBITDA as well even got hit even harder. The debt has gone up. That by itself is not a bad thing, but when it's out of control, it can be really bad for shareholders. As a matter of fact, debt, when it's used responsibly, is cheaper than issuing new equity, but in case it gets out of control, it can be pretty bad for the shareholders. We can see the enterprise value to EBITDA, the enterprise value, market cap, that has gone down even further from there. And then we see the shares. We can see that the management had bought back shares in the last few years. If things continue to go as we're seeing right now, it is more likely that the management will be forced to issue more shares and therefore diluting the shareholder base for the investors. Then we see the earnings per share that have gone from pretty positive to negative, and that reflect the struggle that Bed Bath & Beyond is facing. And then we see the dividend per share, which wasn't paid for a lot of years. Then they paid out for a few years, and now they need all the resources to refinance and reinvest in the business, so they're not distributing right now. So this is my outlook for Bed Bath & Beyond. Pretty negative. All the indications that we get say that Bed Bath & Beyond will face very hard times in the coming months and years. So it will be hard. It is pretty hard right now to see a turnaround, and it's pretty early to say, given the fact that a lot of people are expecting sort of a slowdown or a recession in 2023. So Bed Bath & Beyond could be further hit by the economic situation overall. So this is it for today. Make sure to like, subscribe, and comment which stocks you want me to analyze next. The databases that I use, the links will be in the description, so make sure to check them out. And this is it for today. I'm Giacomo, this is Hustle Hub. See you next time.